Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. All right, we're getting into a program this morning called Investing Basics for Women. As I said at the outset, there'll be valuable information here because we're going to be talking about asset allocation models and the importance of that, diversification, some of these important principles when it comes to investing. As I'd mentioned at the outset, there are 60 years now of Nobel Prize winning academic research showing us how to construct a portfolio, how to minimize risk in a portfolio, starting with Dr. Markowitz, who won a Nobel Prize back in 1990, father of modern portfolio theory, and then also with Dr. Eugene Fama, who won the Nobel Prize in 2013, developing what's known as the three-factor model. Now, there's been improvements even over those periods in the research they've done, and this is showing us how to get the most out of bonds, for instance, what's important there in reducing volatility. We're going to get into that a little bit more as well, and understanding the stock piece. So I mentioned the S&P 500 index, 500 largest companies in the United States, make up 70% of all the money in the stock market, outperform 90% of mutual funds, and the volatility piece of that, how critical that can be. And I'll give you an example. I was doing some, working up some numbers here, just in fact in the break, just to illustrate the volatility piece. If we look at year to date, okay, so from January 1st of 2019 to today, June 21st, right? 17% increase in the market in the S&P 500. Excellent. All right. However, to put in perspective, if we look over the course of the last year, from a year ago today to now, it's 7.45%, a 10% difference. And that's a huge difference when it comes to your investing, of course, right? Imagine, you have $1 million, that's a $100,000 difference. So what it's telling us is that a year ago, if it's only 7.45 from that period to this period, and 17% year to date, then there was a whole lot of down period right between September of 2018, and we know that. In fact, since December 21st, that's when the market bottomed out, if you will, 2018. It's an increase of 22% since that period. Okay, which tells us also that we've had some volatility even in that period since December. And this volatility, again, these new ups and downs, we're at new highs in the market today, okay, as well, overall, okay, over history of market. So here's the things to understand. The S&P in 2018 was down about 4.59% for the year. Now, since then, we've recovered quite nicely, and we're actually at new highs. However, this is when it comes to investing, we want to smooth that volatility out, and that's why this is so important to understand how these basics work. All right, one of the things I mentioned just before the break, women are uniquely suited to sound investing. Now, this is something that I see as well. And one of the reasons is women view investing differently. They think of money as security. Okay, and this is, and again, not to paint with too broad a brush here, this is, you know, there are exceptions to every rule, as they say, and even exceptions to the exceptions. However, what we generally see is women are more concerned about security and view money in that fashion. Men view money almost like it's a competitive thing, as a measure of success, if you will. So, if women are viewing investing differently and understanding how that can work to your advantage, in particular on this security thing, this is very important for all of us. I mean, we all want to have some security. Okay, it's just where that priority fits, relatively speaking. Okay, so one of the things when it comes to security is understanding how you're investing. It's going to be hard to feel very secure if you see your portfolio drop by $100,000 or by, you know, as I mentioned in those two bear markets, $1 million portfolio in that first bear market would have been down to about $600,000. Imagine, you know, how difficult that would have been to stomach something like that and stay invested, stay disciplined at that period of time. And yet, this is the other part. If you bail, okay, then you're securing those losses. I want to be very clear here. I'm saying that the S&P 500 index, 500 largest companies in the United States, okay, makes up 70% of the money in the stock market. Those companies are not going to go away, right? Not all of them. We have one or two now, but they're not all going to go away. So therefore, this is where that discipline, you understanding that principle, that they're still going to be there, and you got to write it out. Now, here's the other part. That's a diversified fund right there. If you've got three or four stocks or one mutual fund, it is possible there that those could go out of business. Okay, and that could put you at risk. That's why diversification is so important. And in a good portfolio, it's not just even the 500 companies. We're going to have thousands of companies to protect you against downside. And it's also going to reduce that volatility in the process. So having said that, I just some caveats there about how investing works, and also as I'm saying, you need to stay invested, making sure you're invested properly, then yes, stay invested. All right, keeping your focus on the objectives, and that's the other part, saying this is a strength for women. They get locked in, right? This is where I'm going with this. This is what I'm seeking to attain through my investing. I want to stay ahead of inflation, for instance. I want to be able to protect the purchasing power of my dollars, and I want to grow my funds so that in retirement, I'm able to pull income from that money to make up for the wages I no longer have, right? Some basics. Okay, are comfortable with a patient long-term outlook. This is another strength for women. Again, they're not out there trying to, set the world on fire. It's more about, or chasing down, the next hot stock tip. They're very much about security, staying invested, staying disciplined, understanding that this is a long-term outlook that they're taking. This is for life, basically. That's what we're doing. We're investing for life. Spend time to more fully understand their options. And this is the other part. What I'm getting into today is understanding, when you're investing in the market, how to do so properly, how the smart money, in fact, invests. One of the things that I've talked about many times is how we go about these things. I think we've gotten a couple of slides ahead on that one, Marilena. Women now drive the world economy. This is a piece that came in from Harvard Business Review. Women now drive the world economy. In aggregate, women represent a growth market bigger than China and India combined. Okay? Now, before I get into learning the basics and covering that side of things, let me throw out there for you. When in comprehensive planning, we get into a lot of different areas to make the most of your investing as a part of that. But we had to do that, if you think about it, understanding Social Security rules, understanding what your needed rate of return is to attain your goals. All of these things come in together. And we're going to get into that a little bit more. First one, we're going to have to take another break. Oh my goodness. But when we come back, I'm going to jump into learning the basics, and we'll talk about the basics of financial planning and how your investing builds upon that. All right? Join me here. We'll be right back on the Retirement Report. Do you have